Hey everyone, welcome back to Corporate Decoder. Today, HEI Corporation just filed a major amendment to their credit agreement, and there is one detail that signals a big shift for how they raise money. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just tweaked their borrowing abilities, and it tells us something important about their confidence in their own creditworthiness. So, what exactly happened on the 11th of June 2026? HEICO Corporation, a name you probably know in the aerospace and defense world, made some significant changes to their main borrowing agreement. Think of this as their primary credit card for big financial moves. This is not just a small adjustment. It is a substantial update that affects how much money they can borrow and when they have to pay it back. Let's break down the key parts of this fourth amendment to their credit agreement. First off, they increased the total amount they can borrow. Their credit facility, which is basically a pool of money lenders agree to give them, went up from $2 billion to $2.2 billion. So they have more firepower to make strategic moves, acquisitions, or whatever else keeps their business growing. But here is an interesting part. They also extended the maturity date. This means they pushed back the deadline for when they have to pay back the entire loan principal. It moved from its previous date to the 11th of June 2031. That's an extra 5 years. This gives them a lot more breathing room. Companies typically extend their loan dates when they feel confident about their future ability to meet their financial obligations. It suggests they are planning for the long haul and are comfortable with their financial outlook for years to come. Another significant change involves how the interest rate is calculated. It will now be based on their senior unsecured non-credit enhanced long-term indebtedness ratings. In simpler terms, the interest they pay will now be more closely tied to how well outside agencies like Moody's or S&P rate their long-term debt. A better rating means lower interest costs. You see this move when a company feels its credit profile has improved or wants to actively manage its borrowing costs based on its perceived financial strength. Now, for a major consequence of this amendment, what is called the credit facility release. Some of HEICO's subsidiaries that previously guaranteed the company's debt obligations have now been freed from those guarantees. This is a pretty big deal. When a subsidiary guarantees another company's debt, it means if the main company can't pay, the subsidiary's assets could be used to cover the debt. Releasing them from this obligation suggests that the main company, HEICO Corporation, is now seen as strong enough on its own to handle its debt without needing its subsidiaries to back it up. This release from subsidiary guarantees also automatically freed those same subsidiaries from guaranteeing HEICO's obligations related to certain notes, specifically their outstanding 5.250% notes due 2028 and 5.350% notes due 2031. This is often referred to as the indenture obligations release. The company is essentially saying, we're solid enough now that our subsidiaries don't need to be on the hook for these specific notes anymore. This streamlines HEICO's financial structure and shows increased confidence in its standalone creditworthiness at the corporate level. In the world of finance, these kinds of amendments are not just bureaucratic paperwork. They are strategic moves that signal the company's financial health and future plans. By increasing their borrowing capacity and extending their debt maturity, HEICO is positioning itself for continued growth and stability. The release of subsidiary guarantees is a particularly strong signal of management's confidence in the company's ongoing financial strength. Looking at the broader context, HEICO Corporation is a significant player in the aerospace and defense industries, with a market cap of around $34.6 billion and a P/E ratio of 44.1. It is a company that investors have historically valued for its growth prospects. Recent news has highlighted their potential in the defense sector, with headlines about acquisition activities. Institutional investors also see value, with major players like Principal Financial Group and BlackRock holding substantial shares. This credit agreement amendment fits right into that narrative of a growing, well-regarded company managing its finances proactively. What is truly compelling here is how confident HEICO seems about its own financial footing. Increasing your borrowing power and extending payment deadlines, especially when coupled with releasing subsidiaries from guarantees, indicates a very positive outlook from management. It is like saying, we're so sure we can handle our business. We don't need our kid sister company to co-sign our loans anymore. This isn't typically what you see from a company in distress. Rather, it points to a business that believes it has strong operational performance and a stable outlook. Given that HEICO is in the aerospace and defense sector, a field that often benefits from long-term government contracts and ongoing demand for sophisticated equipment, this financial maneuvering makes sense. They are likely preparing for future opportunities, whether that is organic growth, strategic acquisitions as hinted by some news, or simply ensuring robust financial flexibility to navigate any market fluctuations. The risk I am watching is how they will utilize this increased borrowing capacity. While it signals strength and expansion, it also means more debt on the books. The key will be whether this additional capital translates into profitable growth and whether the interest rates they secure remain manageable, especially considering the new rating-based structure. Alright, that is my take on HEICO's latest credit agreement amendment. What are your thoughts on this move? Does it signal strong growth ahead or potential risks? Let me know in the comments if this deep dive was helpful. Please hit that like button and subscribe for more corporate insights. You can also join our community discussion over on Discord, linked in the description. That is my take. Stay decoded. If you want the broker and charting tools I use, they are in the description below, affiliate links that support the channel.